Okay, welcome students, welcome to lecture number 22 where we will be continuing with module number 5 under subject indirect taxation. So under this particular module, that is module number 5, is nothing but introduction to customs duty. So where in our yesterday's class, we have seen introduction to custom duty, the different definitions, and we have covered a part of circumstances of levy of customs duty. So today we will be seeing continuation on circumstances of levy of customs duty and types of duty. So students, under circumstances of levy of customs duty, we have first seen what is the charging section. So under the Customs Act, the first section that charges the levy of customs duty is section number 12. So section number 12 of Custom Act is a charging section. Under this section, custom duty is levied on the goods that are being imported or exported into from India. So this particular charge of custom duty is to be considered only on goods and not on the person who is importing them, because on the person there is an income tax, but on the goods, if they are imported or exported, you are going to charge custom duty under which section? Under the charging section of Custom Act, that is section number 12. Okay, the next thing what we have seen is when to charge the customs duty. When does the taxable event occur? So in our yesterday's class, we seen that the taxable event, once we have identified the event and it is tax, then that custom duty will be levied on that. So once the goods cross the 12 nautical miles, that is, suppose if you're importing the goods. So first let us see taxable event for imported goods. Suppose you're importing the goods and the goods cross the 12 nautical miles, that is the territorial waters. When the goods cross the territorial waters, we know that the importation has been started, but it is not completed. When it will be completed? When the bill of entry is filed by the importer. In my yesterday's class, I told you what is a bill of entry. Bill of entry is nothing but a document that needs to be filed by the importer, or suppose the agent of the importer, in order to clear his goods for home consumption. Now we seen what is home consumption also. When the goods are taken off, or is when the bill of entry is being filed, the custom duty is being discharged and the goods are ready to be taken for home consumption or utilization. So that is when the goods are completely cleared from the custom station, from the custom port, from the custom authorities. When the goods are completely cleared to the importer, it is when the said to be cleared for home consumption. So when does taxable event for imported goods occur, students? There are two scenarios for this. One, if the goods are cleared for home consumption, then the taxable event will be when the bill of entry is being filed. Second, when the goods are cleared for warehouse. Now, what do you mean by goods cleared for warehouse? Suppose if any person is not taking the goods directly to the or not discharging the custom duty and not taking the goods directly to his home consumption, means for his own utilization, but for a temporary period he's keeping those goods in the warehouse. Okay, now these warehouse can be public or private. If it is private, it has to get license. Now suppose if the importer is keeping the goods in the warehouse, okay, the taxable event will not be when he is taking the goods from custom port to warehouse. It will be when he's taking the goods from warehouse to for home consumption. So the taxable event in case of home consumption is when he is filing the bill of entry, and in case of warehouse, it is when he is filing the bill of entry to move the goods from warehouse to home consumption and not from the custom port to the warehouse. And whenever any importer is moving the goods to warehouse, he can move it without the payment of custom duty. Okay, but when he is clearing for home consumption, he is required to pay the custom duty. Then only he will be allowed to take the goods for home consumption. In warehouse, what is happening? The custom duty is only deferred, but once he's removing the goods from warehouse, he has to pay custom duty and then clear the goods. But from the custom port to the warehouse, he can take the goods, remove the goods without payment of custom duty. Is this clear, student? Yes? Yes? Yes, students?
Yes, ma'am.
Now, your question can be like, ma'am, what if everyone will start keeping their goods in warehouse and they will defer their tax, like if they'll defer paying their custom duty? Okay, but students, free service is not given for warehouse. When any particular importer wants to keep his goods in warehouse, okay, it is not for free. Rental charges are being collected, okay, in order to keep the goods in the warehouse by the government. So he has to pay the rental charges to the custom authorities. Apart from that, suppose he is keeping worth rupees 15 lakh goods in the warehouse, and the duty on the 15 lakhs is suppose 4 lakh. 4 lakh rupees is a custom duty that he needs to pay. So government says that, so custom authority says that if you want to keep the goods in warehouse, you have to give us a bond of twice of the duty that is payable. So if 4 lakh is the duty payable, you have to give us a bond of 8 lakh rupees. Apart from that, the importer has to pay the rental charges for using the warehouse to keep the goods, plus if any interest is also there and other charges is also there, that also needs to be paid by the importer. That is the reason only those people, only, it is not that all the importers can keep the goods in the warehouse. Okay, ones who can upfront pay the custom duty and clear the goods, they will clear it for home consumption. The others have the opportunity of keeping it in the warehouse. Next, so we have seen also taxable event for warehouse goods. The event, taxable event, will be when the goods are cleared from warehouse to home consumption. Okay, that is the taxable event. So from warehouse, the goods are allowed to move out only when the custom duty is been discharged. Next, in case of exported goods, the taxable event is obviously when the goods are crossing the territorial waters of India. Okay, so under export of goods is complete when the goods are crossing the territorial waters of India, that we know is the 12 nautical miles, and when the proper officer is giving a signal, or when it is clearing the goods for export, that time the taxable event for exported goods occur. So this was the circumstances of levy of customs duty. So under these taxable events, the custom duty is been levied, and this custom duty is levied under the charging section of Customs Act, that is section number 12. Now let us move ahead to types of duties. Remember students, types of duties, you have import duties and export duties. Now import duties is as per Schedule 1, is as per first schedule of Customs Tariff Act 1975. In our yesterday's class, we have seen what is Customs Tariff Act. This particular act contains the rate of duties applicable on the goods that have been imported or exported. So this particular tariff act will give you the rates on the goods which needs to be levied, which needs to be charged on the goods if they are imported or exported. So we have import duties as per the first schedule of Custom Tariff Act and export duties as per second schedule of Custom Tariff Act. So what are the different import duties that will be levied on a particular goods that is imported? Let us first just see the import duties. So first import duty, everyone can see here, it is BCD. Now what does BCD stands for? BCD is nothing but basic custom duty. Okay, so BCD is nothing but basic custom duty, and this particular custom duty is charged on all the goods that are being imported into India, students. So first we're just talking about import duties. So this BCD, that is basic custom duty, will be levied on all the goods that are imported into India. Okay, and this will be levied. Now this basic customs duty, the duty rate will be levied as per section 12. We have seen the charging section, section 12 of Custom Act, and rate you will be taking as per the Tariff Act. See, this is charged. The charging section is section 12. But the rate of BCD, what rate should you charge on that particular goods? That will be determined as per the Custom Tariff Act, that is rate as per Custom Tariff Act. So which section under Custom Tariff Act will define BCD is section number 2 of the Custom Tariff Act. So simple students, BCD is nothing but the basic custom duty which is charged as per section 12, okay, as per Customs Act, and the rate is charged, the rate on it on the goods is levied as per the Tariff Act under section 2 of the Tariff Act. Now, whatever rate is charged, students, okay, whatever rate is charged will be the standard rate. Standard rate of duty will be charged for the basic custom duty. Even preferential rate of duty can be charged. Preferential rate means it can be a lower rate when compared to the standard rate. Okay, but every person or every importer will not get the preferential rate of duty. There are certain conditions which needs to be fulfilled. Okay, and if an importer fulfills those conditions, then he can charge preferential rate in case of BCD. So what is that preferential rate? What are those conditions? Condition number 1 is that at the time of importation, when the importer is importing the goods, at that time he should make a claim that he wants to charge the preferential rate. Okay, he should also claim that the goods which he is producing or manufacturing is in a preferential area, and this preferential area will be notified by the government, students. Central government will notify the preferential area. Okay, and if that importer is falling within that preferential area, he has to declare it, or he has to claim that he's manufacturing goods in that preferential area. Okay, and whatever area is preferential area, it should be notified by the central government. So if he's fulfilling these conditions, then only he can only the preferential rate of duty will be charged on BCD. Otherwise, the standard rate will be charged. Now, in BCD, what happens, students, when you go to Customs Tariff Act, section number 2, you will get to know the different rates of BCD. Like it may start from 5% to up to maybe 12.5%, but currently the BCD charged is 10%, students. So 10% is normally charged as BCD on any goods that is imported. So for example, if I am importing goods worth rupees 10 lakhs, okay, from USA to India, and if I'm filing my bill of entry, how will the calculation be? 10 lakhs. On 10 lakhs, I'm going to charge my basic custom duty of 10%, that is 1 lakh rupees. So 1 lakh rupees becomes my basic custom duty, which is charged on what? Which is charged on the value of the goods that is being imported. Is this clear, students? Is BCD clear? Basic customs duty? Yes, students? Yes?
Yes, ma'am.
So once again, in short, I'm telling BCD is a basic custom duty which is levied on the goods that is being imported. It is levied at the rate of 10% on the value of the goods that is imported. BCD, you can take the standard rate, and preferential rate also is available, but preferential rate is only when you fulfill certain conditions. Those certain conditions are, if you are manufacturing, if the importer is manufacturing or producing in the preferential area, and at the time of importation he has to submit or specify a claim for the preferential rate, then only he will get the preferential rate of duty. The preferential area cannot be notified by you or me. It should be notified by the central government. Then this is BCD, and BCD is calculated on the value of goods that is being imported. Next is IGST. Now, IGST is under section 3 subsection 7 of Customs Tariff Act. Now, BCD we saw it is under section 2. See, Custom Tariff Act is nothing but it is an act which to specify the rate or duties to be charged on the goods that have to be imported. Correct. Now, it starts with BCD, that is section 2. Section 3 is nothing but IGST. Now, what is IGST? Everyone knows it is nothing but Integrated Goods and Service Tax. So, in addition to BCD, students, first BCD is charged. In addition to BCD, IGST will be leviable on the goods that are being imported. Okay. So, suppose if any article is imported into India, in addition to BCD, BCD will be charged by default. But in addition to charging BCD, this integrated tax will be charged at any rate. So it depends on the goods, which goods are being imported. On that, the IGST will be charged. So we know that IGST cannot exceed 40%. So the IGST may be charged may either be 12%, 18%, 28%, depending on the goods that it is being charged. Okay. Now, why is this IGST charged? Why is this IGST charged? Because IGST is charged because the goods are imported from outside India to India. Okay. And what if the goods would be manufactured in India? See, the same goods you would take from India, still GST would be charged, right? Now, this if the same goods are coming from outside India, the government is charging IGST. Suppose if the government would not bring this into picture, what would happen? People would start importing rather than purchasing it from domestic industries. Since in domestic industries GST is charged, so what the people would do? They would start importing. So what government did, in order to curb the import, it is charging IGST on the goods that are being imported at a rate. Suppose if a similar goods uh, is been supplied into India, okay, domestic industry is supplying those goods, those particular articles. So what GST rate would be applicable to those articles? Similar rate will be applicable to those goods that are imported from outside India. So IGST, the rate may differ, like it may be 18%, 12%, 28%, depending on the goods that are being imported. Next is GST compensation cess. Now we know that GST compensation cess is nothing but it is usually levied on the luxury products. Okay, so in customs also GST compensation cess is levied depending upon the product that is being imported. So till now we have seen that when any goods is being imported, you are going to charge BCD. Okay, then in addition to that, IGST will be charged and GST compensation cess will be charged. Now it is very important to know that on what value will this IGST be charged or GST compensation cess will be charged. See students, when any goods is imported, that I said 10 lakhs worth rupees goods are being imported, you charge BCD at the rate of 10%, so it is 1 lakh. Whatever value is you're deriving at whatever value, you will charge something called as social welfare charge that we have seen in our yesterday's class. Social welfare charge at the rate of 1% is charged. On after adding social welfare charge, whatever value is you're deriving, on that value you will charge IGST and GST compensation cess. Now how exactly it is done, we will be studying in the value when we study the valuation of imported goods, when we solve sums on that. At that time I will be in detail showing you that how to determine the value on which you have to charge these taxes or these duties. So the valuation part is separately given, which we will be dealing in the succeeding lectures. At that point of time in detail we will be seeing that how and in what order you are supposed to charge the duties on the value that is being imported, value of goods that is being imported. So next you have protective duties. Now what do you mean by protective duties? See, protective duties are of two types. One is the revenue duty and one is the protective duties. So protective duties are nothing but they are levied. They are levied specially in order to protect the industries, indigenous industries. In order to protect those industries, protective duty is being levied, because many a times what happens if protective duty is not levied, many a times people or businessmen, they import cheap articles. Okay, they import cheap articles from they import articles which are very cheap rate from outside, which will hamper the Indian industries. So in order to protect such industries, such indigenous goods producing industries or manufacturing industries, protective duty is being levied. And this protective duty again is levied by the central government. Okay, and what should be the duration of the protective duty? See, protective duty is, it is not that it will be, effective throughout. So what is the date up to which it is going to be effective? That also will be determined or notified by the central government. And the central government has complete right to alter such duties. Okay, when I say alter such duties means the central government may either increase the rate of such duties, decrease the duty, and it can do so by giving a notification in the official gazette. But if it wants to increase the protective duty, okay, it requires the approval of parliament. So see, protective duty is simply just to protect, give protection to the indigenous industries. Okay, and such duty is levied by the central government, number one. Number two, the duration for which this protective duty will be effective, that is the date from which it should start and the date, ending date, and the entire duration will be determined by the central government, and central government may alter these duties. Either it can increase or decrease. If it has to increase, it has to take the prior approval of parliament. Is this clear, students? Is protective duties under customs clear? Yes?
Yes, ma'am.
Okay. Next, we move to the safeguard duty. Now, what is the meaning of safeguard duty? See, many a times, in order to safeguard the Indian industries, okay, the domestic industries, the government may levy the safeguard duty. Now, what happens in this safeguard duty actually is the government's intention is to safeguard the domestic industries so that no injury is caused to the domestic industries. So if the central government is satisfied that there is certain articles that are imported which are imported in an increased quantity, and when such importer is importing it in an increased quantity and which is causing harm, which is causing a threaten, which is causing a serious injury to the domestic industries, then what the government can do, through a notification in the official gazette, it can impose the safeguard duty. The main purpose of imposing safeguard duty is just to make sure that the domestic industry is not injured. Not injured in the sense, if people like other businessmen, they like importers, they start importing the goods from outside India, okay, in bulk quantities, in huge quantities, what happens to the domestic industries then? It will be a threat to them, because those people who are, doing their business, it will hamper their business. So just to make sure that those in domestic industries are free from the injury, the government may I'm talking about may impose safeguard duty. And how, what is the procedure? it will impose the safeguard duty by issuing a notification in the official gazette. So is this clear? So threatened means it will be a danger to the domestic industries to survive. Is this clear, students? What is safeguard duty?
Yes,
Yes,
ma'am.
ma'am.
Okay. Next is countervailing duty on subsidized articles. So this countervailing duty on subsidized article is imposed only when certain conditions are fulfilled, students, or certain conditions are satisfied. First condition is that such articles should be imported into India. That is the basic condition. And such importation may be directly or may not be directly from the country of manufacture or production. So suppose if any goods are actually manufactured from, suppose, China, but if they are same goods is importing from USA, that is not relevant. So even if they are manufactured or not manufactured from the same country, and if they are imported, countervailing duty on subsidized articles is still levied. Okay, the article may be in the same condition as when exported from a country, okay, who is manufacturing or producing it. So when China is manufacturing or producing it, okay, and it is suppose selling those goods to USA, and from USA we are importing, so whether or not they are in the same condition is irrespective. Okay, any country or territory, if it is directly or indirectly giving any subsidy on the manufacture, production, or exportation of any article, such subsidy includes subsidy on the transportation of such article. That means that if any country, okay, who is uh, manufacturing or producing such article or is exporting such article, and if any subsidy is given including subsidy on the transportation, then also countervailing duty on subsidized article is being levied. So countervailing is nothing but additional amount of duty that is levied on such articles, products, or goods. Is this clear, students? And what will be the period of this countervailing duty is the period for which this duty will be in force will be for a period of 5 years. Suppose if it is imposed today, so from today 5 years this countervailing duty will be imposed on that particular subsidized article. So the duration for countervailing duty on subsidized article will be for a period of 5 years, and this 5 years you have to calculate from the date of imposition. Is this clear to everyone?
Yes, ma'am.
Okay. Now next is anti-dumping duty. Now what do you mean by anti-dumping duty? Okay. So suppose that the normal value in the exporting market, suppose the value in the exporting market is more than the export price. So what happens is when you are when you are importing the goods, okay, suppose from China, the amount, the the value of the goods that you're importing is very cheap, very less. So what you'll do, you will buy bulk quantities and start dumping it in the Indian market. You'll start dumping it in the Indian market, and you will charge a rate, okay, which is very less as compared to the rate that is charged in the domestic market. So suppose if there is a domestic industry which is charging suppose rupees 50 for a particular article, but you are selling the same article which you have imported at a very less rate and dumped bulk of quantities into India, and you're selling at suppose 30 rupees. So what happens? It is dumping done, and due to that dumping, it is causing harm to the Indian industry. So in order to avoid that, the government imposes anti-dumping duty. Okay. So when the export price of a product imported into India is less than the normal value of the like articles that is sold by the domestic market. So suppose the exporter here is China, for example, importer here is India, And if the same goods are produced or manufactured in India, the value is high, but when you're importing it from China, the value is less. So what happens? There is dumping done, and this process is called as dumping. So dumping, what happens in dumping? The person who is dumping the goods, he can play with the market and he can charge his own rate. Since he's importing at a cheap cost, he can fix his own market price. What will happen to then? What will happen? The Indian industries will be hampered. That is the reason anti-dumping duty is being levied. Is this clear, students? So what will be the margin of dumping now? If I want to know what will the normal value, whatever is the normal value here in Indian market minus the export price, at whatever price it has been exported minus the normal value, that value will be the margin of dumping. Is this clear, students? Is anti-dumping clear? Yes.
Yes, ma'am.
Okay. Then we have schedule. As per Schedule 2 of Customs Tariff Act 1975, we have export duties. So, export duties, you have certain particular items that if they are exported, what will be the rate of duty that will be levied. Usually, in case of exports, no heavy duty will be charged. Reason being because the government wants to promote the exports. Okay, maximum exports happening in a country, the economy will grow, the foreign currency will be uh, India will be receiving the foreign currency. That is why the government promotes the exports. So they are export duty that is levied on only certain items. Few of them are de-oiled rice brands or oil cakes at the rate of 10%, luggage leather at the rate of 25%, leather at the rate of 15%, snake skins and raw fur skins, which is at 10%, uh, ferrous waste and scrap at 15%. So if these particular items are being or goods are being exported, the rate of duties are specified here. But otherwise, the rate of duties will be uh, not there in case of exports because government wants to promote the exports in the country. And we have already spoken about social welfare charge on imported goods. Okay, earlier there was education cess before Feb 2018. After Feb 2018, there is something called a social welfare charge that is levied. It works at same as we used to charge education cess. Okay, in the same way, even social welfare charge is being charged on the goods that have been imported or exported. So these are the different types of customs duty that is being charged. Now, when we are going to study valuation of customs duty, that time I, w- I will in detail explain what is the format. In the sense, these duties will be charged on what particular value. So if it is BCD, on what value are you going to charge BCD? IGST, on which assessable value will IGST be charged? Now in this session, you will have just understood why these duties are charged, what are the meaning of these duties and when it is charged. In my next succeeding lectures, when I will be dealing with assessable value or valuation of imports, that time I will explain you the assessable value on which such duties has to be charged. Is this clear, students? Yes, students?
Yes, ma'am.
Okay. So thank you so much, students. We are done for the session for